Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 10th, 2018. I wanted to wait to the market open to take a look at some of the trade ideas as well as the broad markets. A lot of movements in the futures last night, and a lot of movement in the market recently. You can see these zigs and zags. These are big moves. What we're looking at here, by the way, is the NQ E-mini futures, the Nasdaq 100 futures on a 60-minute chart. So the bigger picture is this. I have this chart's truncated. It's cut off down at the bottom, one of the indicators, but either way you can see on this one I have a MACD. You can see the divergent low that I've highlighted. It led to a big rip. We were rejected at this downtrend line. So this is what I'm watching. One of the things I'm watching, one of many things that I'm watching, this downtrend line. Yesterday's action, you can see as we zoom in, we had that gap up that's shown right here. So the market's gapped up, had a nice rally. I think it was on the Qs at least intraday. Remember, the future chart will show round the clock trading, whereas QQQ will just show the intraday session or the regular hour session, I should say. And that was about, I think, a 2.7% gain in QQQ, most of which, but not all of which, was faded. And I made mention of that. The most important thing when you put all of this volatility aside is how is the market closing day after day? What is the overall trend? We know within the trend, whatever that trend is, and I defined those last time. Very near-term trend being up. By very near term, I mean just off the lows from earlier, about a week ago. So the very near term is up. More so in the SPY, we need to take out this previous reaction high here on the Nasdaq in the Nasdaq 100 futures. But if we do, then that will help confirm that the near-term uptrend, the near-term trend, I should say, is bullish. But of course, bigger picture, again, as I highlighted in last night's in the update before the close yesterday or shortly thereafter, this has been the trend as of recently. So although we've made another high here over this trend line, that's not really significant. What's important is so far, if you look at it this way, again, I did this last night, you have a series of lower highs and lower lows so far on the bigger picture. So where I'm going it appears that this market wants to try to catch a bid, but all these rally attempts keep getting sold into. Um, More so on the way down. Recently, it's more of the dips are being bought up. However, I'll just lay it out here. This is the most important level, I think, right now on the NASDAQ 100 futures as well as QQQ. And I'll get to that QQQ chart in just a second here. I know a lot of you prefer to trade the Qs versus futures. So here's a near-term uptrend line that's starting to, we can start to give some validity to because we have three tags. I usually like to see at least three reactions on a trend line. That's one thing to watch. So on the bearish case, let's see if that level goes. I could also add some support right there, but we'll look at the QQQ chart again because I know a lot of you trade that. But this level right here, 66.52 and change, that's what I'm watching for to see the NQs take that level out. If they do, I'll show you where I think we're going. This is another chart on the NQ. This shows you the RSI, the PPO, the divergent low right here. You can see these lines come down. They make a series of bullish or positive divergences into this recent low. That was followed by a very strong thrust up. That thrust hit that trend line that I just showed you a minute ago on that white chart. It's just a different charting platform. Pulled back. Yesterday's rally had taken us above there, but then we failed. There was a late day sell-off. There was some news events that triggered that. But right now, here's a big picture. We are back testing that trend line. So in the futures last night, we recouped all of those lows, the fade or the losses that we had intraday, and then some. We actually just slightly took it out last night or early this morning on the highs in the futures, and now we're back testing. So here we go. If this back test holds, I do still favor the upside scenario. Again, you can't bet the farm on it right now. There's mixed technicals. The longer term charts still look ugly. There's always a possibility since these short-term charts, I can make the case for a rally. If the rally plays out, that will help negate some of the recent bearish technical developments, such as the QQQ breaking under that and closing below that weekly trend line. That's a pretty significant event. The Qs will have defended the 40-week moving average. That's another technically significant level so far, which they've defended. And just to give you an idea of how far we could go, my minimum target zone up here, I don't know if you can make it out on the video, 68.88 right there, and then 68.18 and change, so pretty tight support or resistance zone, I should say. And that would be about a 3.25, a little bit better than the 3.25% move from where we are. And I could easily see the possibility again, if this level here, this 66.55, the level I'm highlighting right here, this purple line, if that gets taken out, that would be comparable to that neckline I showed you on the inverse head and shoulders pattern for QQQ. If that gets taken out, I can easily see the possibility here of a move up to about 69.27, and that would be a better than a 5% rally from where we're at right now. So that is my, let's just say right now, my preferred scenario is to see this level hold and bounce. But if we fall back below this trend line, we start taking out these previous reaction lows one by one. That just chips away at the bullish case and adds to the bearish case, these reaction lows. And of course, if we take out this low here from early April, about a week or so ago, that opens the door for a test or even an undercut of those previous lows we had in February. So as of now, again, showing you the good and the bad, and I favor the good for now, but this is it. It all hinges on this level. I think we need to see this level get taken out. If we do, I think we'll see a pretty big rip. Let me show it to you in QQQ. For those of you that prefer to trade the ETFs, this is that uh, potential head and shoulders pattern. As I said, I'm not crazy about the fact that the symmetry here on this right shoulder, we might have, you can get two heads, you can get two left shoulders, two right shoulders, two of each. You can even count this as the head if you want, if you don't want to count that as a double-headed pattern. But again, I showed you it's sort of a W pattern as well. So here was a right shoulder. Everything was looked really primed and ready to go yesterday, and we had a rejection there. However, this just may be another shoulder. Whether you want to call that a head and shoulders, inverse head and shoulders bottoming pattern or not, I think one would find it hard to argue that this is a pretty significant level. And we can probably even draw that line a little bit different now. If we look at it this way, let's see, we can probably come down. This is that same trend line really that I had on the NQE minis right here. So we can look at it this way. If we can pop up above where the market's stopped so far today, this is today's candle right here. See today's gap, this gap right here. So we hit that downtrend line. And again, it is a little bit different on QQQ than the futures, because the futures are trading, virtually around the clock, while this QQQ, these are regular session trades, 9:30 a.m. till 4 o'clock Eastern. And there it is. So we take that level out, and then most importantly, a break over, it's roughly, to give it, a little bit of margin error, use the highest point, that reaction from back here, and you're talking about 161.80. So if 161.80 goes, um, I'd have to correlate those targets to that I have on NQ to QQQ. I've been personally trading NQ. I like the fact that I can set stops around the clock and not wake up to these big gaps up or down, not have surprises as QQQ does. Today we gapped up well over 1%. We're still up over 1% right now. So here's some potential targets if you wanted to take a look at those. Let me turn those on for you. 165.70. And if we get up there and fill the top of that gap there, we're talking about 171. So let's see if that roughly equates with my, a little bit better, about 7%. So again, I'll have to check these against those levels on the NQ. Here's that bottom of that gap. Let's see what this would look like here. All right, turn that level on, 168.82, and from where we're at, talking, about 5.84% or so. So There's the potential there, and the catalyst for a rally up there would be first, let's take out today's highs. That'll probably pop us up to test this neckline and or that resistance level, and it's been tested quite a bit. I think if we get there, we're going to punch through, and I think if we do punch through, we can see a pretty quick move, but we are far from out of the woods yet. Again, a lot of technical damage done on the longer term charts, the daily and the weekly charts of SPY. So here's a trend line you can draw. It's not as clean off the QQQ as it is on those NQE minis. That's why I think if you're trading the Qs, even if you don't trade futures, you should chart them. Keep an eye on them because there might be a significant trend line there. As I just showed you, we had a trend line with 3 clean reactions, and we don't have the same trend line here. Only have 2 reactions so far. There's also a gap. That was yesterday's gap right here. We backfilled it yesterday, almost a perfect backfill at the close. So the Qs, what I do like about that is the Qs didn't leave any unfinished business. There was a gap there. They went ahead, backfilled it, and now popped up. So let's see what happens. This rally's getting a little bit faded as I started the video. You can see the red candles. We popped up and we're moving down. I'm also watching streaming 1-minute charts on another monitor, but no damage yet into, to backfill today's gap. Well, we have to come all the way back down here. That's another 1% drop. In this market, that's not much at all. We could do that in the blink of an eye. We did it yesterday, and we've done it on both the up and down side. 1% moves are the new norm lately. So that's it. And I'll post an update soon if I see any technical developments, such as a breakdown, back below this level. So here it is if you guys want to watch it. Pretty much yesterday's lows in the top of that gap from the other day. There it is, 157.43-ish. So watch that as support. Watch these levels as resistance, and there's really not much else to say about that. If that goes, then we just watch the next reaction lows. And then this big important double bottom down here, that's a pretty significant level. Some of the other things I'm watching, I'm still watching Bitcoin. Needs some work. It needs to show me a little more. It broke out the other night, I should say. I think it was Sunday night. We gapped up above this falling wedge. We came back, fell right back within the wedge. There was still a very powerful divergent low here. Prices seem to be stabilizing, but again, work to be done on this one. By stabilizing, you can see we've sort of traded around. We've traded in this range recently after, being in a pretty clear downtrend for a while. We had a little counter trend rally here, but the trend has been down up until this point. So we do have a trend line breakout. It failed. There's quite a bit of whipsaw signals lately because of all this volatility, but still one to watch. And if you don't trade futures, this is GXBT. There's 2 different futures contract. One trades on the CME, the other CBOT. This one trades dollar for dollar. So if you it doesn't have a leverage factor like a lot of the other futures, and so the price is 67.60 right now. So one contract costs you $6,760. And for those of you that would prefer something that trades similar to an ETF, this isn't technically an ETF; it's a closed-end fund. Means this will trade at a discount or a premium to Bitcoin, but does a pretty good job of tracking it. And you can see here, there's that downtrend line it needs to take out. It never took out its downtrend line on the daily chart. The potential divergences are still in place. I call it potential because we still haven't made that crossover. Those lines are so close, but if you look closely here, we do not have a bullish crossover yet on the PPO. We have the signal line still trading above the PPO line. So that PPO line, the blue line, needs to cross up above that signal line before taking out this low to confirm these divergences. Maybe that happens. Maybe we have one more test of this recent low. But again, I watch both charts together. Keep an eye on the futures if you're going to trade this one. And I've already outlined targets there. Some other things. I'm being patient on some of the things I've highlighted recently as both long and short trades. I've shared quite a bit of unofficial trade ideas. Why so many unofficial versus official trade ideas lately? Well, first and foremost, market conditions. The market's choppy, very erratic, can go either way here. We can certainly break down and have another 5% downside. I just laid out the case for possibly another 5% upside, and we're at a crossroads. So I'm not eager to add a lot of official or personal trade ideas, long or short. I've had long-term positions, and I'm actively trading mostly just NQE minis lately. Um, but this is one that I'm still on watch for a potential reversal. Somebody inquired about it the other day, but I don't see evidence of a reversal yet. This is wood, one of the couple. There's a couple ETFs, another being CUT cut, um, and they don't hold. This does not hold futures contracts. A lot of people might be confused because most commodity ETNs, their underlying security are the futures contracts like wheat and oil, or USO OIL is one, another oil tracking ETF. A lot of the grains that we trade, but this one holds companies that are in the timber and forestry industry, I should say. But I see a nice bearish rising wedge. I just don't have any sell signals yet. There's no reason to short something in an uptrend with no signs of reversal. Like I always say, divergences in themselves are not anything. They're not a sell signal, merely an indication that a trend change is likely. So if I can see something, enough evidence to put a short on this one, it will, and maybe even lumber futures as well. They do have futures contract for random length lumber. Let's see, a couple others I've mentioned lately. Wheat's been strong. I've mentioned it right back here. I'll pull back to this support level, and it's had a nice pop since then. That was covered in a recent commodity video, up over 9%. Along with corn, I mentioned that one as a pullback right here to that support level. Corn's rallied nicely, up about 6 or so percent, and right testing that previous reaction high. So these I still like the grains, especially as a way to diversify portfolio. Sugar needs to giddy up and go. It's just been working its way down here. Let's see. There it is. Cane is the one I have because SGG, along with a lot of those in that family or ETNs, are being delisted and replaced with new ETNs. So I'm using Cane on this one. And there it is. Max stop below $8. We have a low of $8 right now. So one tick lower, I'll let it go. That's the stop. No reason to stick with it. That rising wedge is not playing out yet. These divergences will soon be burned through. If it just has a flush out move and reverses and the chart starts firming up, I'll put it back as an official trade idea. But as of now, that one is close to hitting the suggested stop. And we'll wrap up with this one. I mentioned it, I believe, in the trading room yesterday. Might have been on the front page. PPLT, Platinum ETF. There's a couple out there. This one is the one I like to trade if I'm going to use an ETF, where you can trade Platinum futures, of course. So we had this yellow descending price channel. We gapped up above it. And we also had, you can see the white line shows a bullish divergence. And these are potential targets that I listed out there lately. Silver and gold, people keep asking me. I can't. I watch them every day, but they are still stuck within these. We're on a 60-minute chart here. They're stuck smack in the middle of this sideways trading range. So I have no desire to put a trade on personally or officially on the site that is stuck in a sloppy sideways grind. So let's just wait till we see a resolution there. And yes, I talk about the euro US dollar and of course the dollar index being a big part of where these things are probably going. I mentioned on the 60-minute chart, we had a divergent low right here. This descending price channel breakout back test right here. We broke out. You can see hit resistance right there at that level I think marked before. Pulled back tested, and we've been moving higher since. And so this is what it looks like in here. I made mention before that when this breakdown occurred that I was a little skeptical of it, both with those 60-minute divergences that were indicating a possible bounce, as well as the fact this was not an impulsive breakdown, and we also had some pretty decent support levels right below. So far, my instincts held true. I didn't chase it. I didn't, jump on that. Euro down would have meant dollar up, which would have been bearish for gold. But so far, that held, and it is now we're back inside the wedge. So that was a false breakdown, and it was a pretty well-defined trend line you can see here. But again, the euro US dollar, although it's the biggest component of the dollar index, it's not the only component. So I also watched the yen, the US dollar Japanese yen pair that broke out a bullish falling wedge. This is saying dollar up, yen down. So like I said, there's a lot of contradictory analysis with gold, or at least some uncertainty now. So I'll keep an eye on those. And again, even and that speaks to the platinum trade. I'm not super crazy about it because of the uncertainty with gold and silver right now. Yes, they are different metals, different uses, and but they all the precious metals tend to move together for the most part. So that's why platinum, I share that as an unofficial trade idea. I'd like to see the case, the bullish case for gold and or silver both, firm up, as well as a bearish case for the dollar. At that point, I might be more interested in putting a trade on the precious metals and or the mining stocks. All right, guys, that's about all I wanted to cover right now. Like I said, keep it light. This market will pick a direction sooner or later. The volatility will abate. That's one thing we know for certain. We look here. Let me just jump to a weekly chart of the VIX. I made mention of this in the trading room recently. You can go back in time. We from time to time we get spikes in volatility where the VIX spikes up, and as you can see, and I've measured it out. Usually those spikes are pretty fleeting, but at times they can last up to a couple months. I think the max right here was about 3 months. This one's going 2 months into an extended period of volatility. Yeah, that initial spike was faded as it was here. But then, we came back, and then we had a period of elevated volatility. But what I'm trying to get at here is these periods never last forever. We will fall out of a range of volatility soon. So the bottom line is this: if the bearish scenario plays out and this market undercuts, the February lows, and undercuts them by quite a bit, not just a slight undercut with a reversal, but we drop and we head down another 5% or so, we could get another pop up in the VIX. That's certainly possible before we come down and the volatility abates. But my bullish scenario has us going higher from here, so I'm favoring downside in the VIX soon, especially if that 3 to 5, 6% bounce in the cues that I'm looking for happens. So that's it. That's right now my primary, scenario. That's how I'm positioned. But again, I'm not betting the farm on it, and I'm also, like I've said, the theme for 2018, as it normally should be, is diversification. Trade commodities, trade bonds, in both your long-term accounts, and you can even trade them in your, more active swing trading accounts. And that's what I'm doing. So it tends to smooth out the bumps. One day I might be on the wrong side of the trade on the equity markets, whether I'm long or short. But then, I'm firing on all cylinders with commodities or bonds, or at least those cylinders are firing at that point in time. All right, guys, we'll wrap it up here. And if I see anything significant occur in the markets, or any good trade ideas that look compelling, I'll point those out. This has been Randy Finney with Right Side of the Chart. Have a great day.